Welcome back to Indianomics. The long-awaited Maligaon report on how to regulate microfinance institutions was made public last Thursday. The report said that RBI should continue to be the regulatory body for NBFC MFIs and not the state governments. Secondly, that these MFIs, microfinance companies, should lend only through groups of individuals, largely for income generation purposes, that their rates should be capped and the beneficiaries should be families that don't earn more than 50,000 rupees a year. My colleague Menka Doshi caught up with Mr. Maligaon. Here are slides of that conversation. She began by asking him if this 50,000 rupee limit would exclude most of the urban poor from getting any loans at all. Here are that conversation, we have more.
I accept that yes, there was some concern that whether 50,000 is too low a limit for a household income in a urban area. We had some difficulty in saying what is urban or semi-urban or rural. Maybe this is something which the Reserve Bank, when they draft the regulations, can always consider it. I am not saying that there is any fix.
But does this limit to some extent reflect maybe your thought process that microfinance should be restricted or limited to the rural areas and not necessarily urban?
It's not restricted, but what it does reflect is that don't equate microfinance with just microcredit.
Okay.
Don't just say that every time I give a small loan to someone, it's microfinance. The concept of microfinance is it is primarily meant for the upliftment of women.
Right.
It was intended for women who could then do a income generating activity.
Right, and it is meant to be group oriented.
Yeah, no, I'm coming to that. They had to be an income generating activity, which could therefore, after repayment, give to the woman some surplus income, which would add to the household income. It was never intended to be a loan given for other purposes. Now, then the question which came in was that if you give to someone for income generating activity, it's not just enough that you give the money, it's also necessary that you should do the training, you should do the hand holding. All of this is done through the group method. The second point is, why do you go to the group? These are all unsecured loans. How do you enforce recovery? To enforce recovery on an individual, then you get these coercive methods of recovery. However, if you are given to a group,
it's peer pressure.
The peer pressure comes in, the group ensures that this is there. So that is therefore the whole concept of microfinance is that. Otherwise, there is no difference between microfinance and money lending.
Yes. I'll come to the other key issue, which is the regulatory structure, where you have left it to some degree up to the self-regulation of microfinance institutions themselves. You've said the RBI as well. I think these are the two prongs.
We've said there are 4 pillars for compliance.
MFIs?
First is the MFI itself, which means that the MFI has to create the organization. It has to have an internal audit, it has to have an inspection department, which has to ensure that the management takes the risk that if, say, one of their employees does coercive methods of recovery, the management could be liable.
Right.
The second concept is that the industry association, they have to have a code of customer protection. They have to enforce that. And the most important thing is that the MFI will say that I am a member of this association. That association will be recognized by Reserve Bank only if at least 1/3 of the total MFI population is a member. That industry association will ensure that it will not only on its own inspect but also get complaints from others, and if it finds there is a violation, it will throw out that member. Now what will happen in practice? The member then will not be able to say I am a member of that association. And whoever the banks which are lending to that member may say, all right, we will not give you money because you are not a member of that association. You must have been guilty of violations.
I understand, so the association should have the gumption to do that. What I mean is that these first 2 pillars that you
Yes.
point out to represent to some degree self-regulation of the industry by the industry.
Yes, yes, that is a
The other two are RBI and the ombudsman that you have recommended,
Yes,
correct?
the banks will also
The
regulate.
banks will also regulate to some
So,
degree.
there are 2 or 3 ways in which you can
But you've left the state out. The state governments. Now, RBI doesn't necessarily, will RBI have the
That's what I'm
infrastructure?
trying to. When you regulate, you can regulate by punishment,
Huh.
or you can regulate by denial of benefits. Now, we have no powers to punish. That is for the state.
Right.
So if there is a violation, let's say if as a result of coercive method of recovery, someone goes and beats up a person, there are other state laws under which you can take action. If those laws are not adequate, you can amend those laws. But what we can do is, we can ensure that if a MFI does not conform, we will not give it priority sector status. The banks will not lend money to it. It will suffer a reputational disadvantage because people will rather go to an institution which is a member of an association than not be a member. All of these are the methods by which you can enforce compliance.
And you didn't think that you would make the state make the state play a bigger role in the regulation of these
We
entities?
cannot do that. First, there are too many states.
So there would be differences in
and then you
approach.
would have too many. That is not our job.
Well, some contrary thoughts now. Is RBI capable of regulating MFIs? Aren't they too scattered and small? RBI is necessarily a centralized organization. Now, making MFIs, which is what the report does, making MFI industry organizations like the MFIN, banks and RBI responsible for good behavior of the MFIs could mean that there will be no regulation at all. It could simply fall between the stools. Also, do you ever see RBI being able to inspect the books of even 1% of the MFIs? They have 90 million borrowers. And then, this network of ombudsmen who are supposed to be, the investor grievance cell, who pays for them? Have these ombudsmen been successful with retail borrowers who are a much more savvier lot? And if RBI was able to control, why did it fail in the case of Andhra Pradesh, controlling MFIs from the malpractices of coercive methods of recovery, usurious rates? Clearly the state seems to have a role over here, and perhaps this debate needs to continue. The state government should have a role. RBI quite clearly has failed. There is another opinion there. Secondly, of course, this 50,000 rupee limit. A large number of urban MFIs are arguing that almost all their clientele earn much more than 50,000 rupees. That doesn't mean that they are not poor and not eligible or not in need of these loans. Finally, will income generation rule work at all in urban areas? Income generation rule works in rural areas. In urban areas, largely it is for consumption. Again, those are issues on which we will have to debate in the weeks to come. For now, thanks for watching IndiaNow.